Okay, good morning, everybody. My name is Anne Rossley. I'm here with my friend Kyle Harvey. We are going to start our weekly Monday morning coffee with Kyle and Ann. Okay, so good morning, everyone. Again, I'm Anne Rossley. With me is Kyle Harvey.
Mm-hmm.
We are real estate agents in the Gold Coast, and we love talking about real estate in downtown Chicago. Today, we have a bit of technical issues, so please, in advance, forgive us. Next week, we will go from our office. I have a feeling it is a combination of my trying to have a lot of information on the screen and Kyle's being in a place that is
Dead
not
zone.
their own.
A dead zone.
It'll get better, folks. Anyway, we'd rather bring you bad visions of us with good information than to not come to you this week at all. So
yeah,
that's our story. So Kyle,
let's start talking about stats because we've got so much to talk about today. So let's talk about stats. What have we got, Anne?
Okay, I am going to pull it up, and because I'm trying to, hold on, because I am trying to, what do you call it? Keep my megapixels down or whatever. I'm having everything off screen here. Okay. Chicago housing market update. First, let's talk attached condos, townhomes, co-ops, median
Let's
sales
lose our
price.
names. Let's lose our names in the ribbon.
Let's hope everybody knows who we are by now, right?
All right. There we go.
Okay. 418,000, up 1.7%. Units for sale, 3,400, down 28.9% versus last year. Units under contract, 1,859. Wait, what? No. 1,859 is here. That was our high. I was trying to figure out. Okay, 606 down 40% is this number down here through October.
These are the first times we're showing you the October numbers.
Yes, it is. I was up early this morning with our time change. It helped.
Yeah, that helps.
Getting all the data. Okay, down here again, 693 units closed last month, down 33.9% versus, now keep in mind when I say down 33.9, that is versus October of last year. Okay. All right.
Wow.
Properties closed year to date. The first 6 months of the year or 5 months of the year and how great they were really is what's keeping this close to last year. Year to date, we're down 12.4%. Still significantly over 2020.
Yeah. And we'll always be over 2020. Yeah.
2.9 months worth of inventory is down 19.4%. Showings per listing, 3.1 showings per listing. Compare that to over 7 in February of this year. So we had such high demand. Everybody was in and out of condos at the beginning of the year. Now, if you have a condo on the market, you should be getting about 3 showings per month. If you're average.
Yeah.
All right. Single family homes. Median sales price, $1,263,000 and climbing, up 8.9% versus previous year. 281 homes for sale is down 10% versus previous year. The high, 621, 421. Homes under contract, 68 homes went under contract in the lakefront communities, down 42.4% versus previous year. Previous year, I threw the number in here. 118 was this spot right here in October of 21.
A crazy year.
Yeah.
A crazy year.
Okay, homes closed. 81 homes closed last month. That's down 27.7%. Year to date, 1,151 homes have closed. Compare that to 1,406 last year and 992 the previous year. Look at that. They're coming closer together, 22 versus 20.
Yeah.
Month supply of homes, 2.6 months worth of homes is up. Now, this is the first up on inventory we've seen, Kyle.
Yeah, it did. It went up. It went up last week, and or the end of the month. It was
very interesting because we've been down, down, down in inventory.
Yeah.
So
I guess some people are realizing that they have to move.
Yeah. Okay. Sales price as a percent of original list price. There was a time when we were at 99%. You had to pay basically list price in order to purchase a home. And we're down to 95.8% now. Still, very high. It's not like these are 85% lowball offers, but, I think it's worth noting that it's down. The number of showings per listing on a single family home is 3.3, down 25% versus a year ago, and down less than half of what it was in February.
Well, let's go back to that previous slide. We all saw that that prices for homes had grown about almost 9%. We showed that before, year over year, that it was 8 high eights percentage of price appreciation. That sort of explains why 95.8 is the number. I mean, because on some level, there's a recognition that prices have gone up. So people are doing better against this. It also probably means that people have recognized what our market is and have priced more appropriately. Fewer people are like, whoo, let's see what we can get.
Right. Definitely. Now I want to show you one other thing here. Quick facts for all of MRED. This is the showing time index. And this is such a bizarre number. Let me refresh everybody's memories. This is arbitrarily compared to January of 2014 and the first week of January of 2014. They decided that that was going to be the flat line, 0, 100. It was going to be 100. Okay. So the showing time index compared to January of 2014 is 129.9 or 29% higher. And that may look good, but we were at like 200 and something at some point when the market was really brisk. And it continues to decline. So here we are. If you look at March of 2022, the showing index was 268.
Well, let's also be clear. In January of 2014, on January 1 of 2014, the world was quiet. So they used that as the baseline in a very quiet time. It used to be January was the slowest month. And now it is a much hotter month for real estate than you would think. So yeah, crazy, but also last year was such a weird year.
Right. Okay. So here are some interesting quick facts. This is all of the Midwest real estate data MLS. Okay. Year over year change of new listings. Okay. So new listings, including the relists. Okay. New listings of single family homes down 16%. Attached condo co-op townhouse down 28%. Year over year change. So these are 12-month numbers now. Okay. Year over year change in pendings down 23.4%. That's down significantly overall versus the city. The city's holding better than elsewhere. Year over year attached down 32.2%.
This is the entire MRED market, the entire market.
Yeah.
Okay.
And year over year change of homes for sale. So that's inventory, like raw inventory, not month supply, down 5.2, and condos is down 29.8. So that's showing,
that's a story of interest rates.
Yeah, absolutely. Now, this is interesting. Housing Affordability Index.
Good.
So, if you've never seen a housing affordability index chart, dear friends who are watching us, the higher the number, the better, because what this means is 120 would mean that the median household income is 120% of what you need to buy a median priced home. Okay. So what that means is houses, the average person cannot afford a median priced home right now, a single family. They can afford the condos.
Wait, say that again. Because means the median income was 120% of what is necessary to qualify. Thank you.
Right.
To qualify
Right.
for a median price home. Got it. Okay.
Right. So if you're looking at the Keeping Current Matters chart, which is something you and I both follow, there was a time when affordability, like a few months ago when interest rates were low and prices, that you would see a number in housing affordability of like 148, 158. People could afford to buy homes, or they were qualified to buy homes. With interest rates rising now, people aren't,
Is this sheet for the MRED area, the Chicago area?
Yes.
Wow.
Yeah.
Well, that's again a story of interest rates.
Absolutely.
And attached is better. Okay, good to know.
So I just discovered this report, and it's really important for us to look at this one, I think, because this is lender mediated report, meaning how many sales are from lenders, short
Pulling up
sales,
cash.
real estate owns.
Lender mediated. Ah, interesting. Got it. Okay.
Yeah. So, in 2009, 10, 11, 12, there were so many foreclosures, right? Because people didn't have equity in their homes. They couldn't make their mortgage payments, yada, yada, yada. Well, we're not seeing that right now. See, look up here. So many homes, almost 60% of homes in 2012 were lender mediated. But down here, people today have equity in their homes. So this is the chart that says, even though we have inflation, even though interest rates are higher and the market has slowed down, we are not bound for a 2008 housing event because people have equity. They're not getting foreclosed upon, right?
And that's largely because banks have stopped giving loans to dogs. And by dogs, I mean Labrador retrievers. They have really tightened up their lending requirements. And it's sometimes people feel like, well, that means I can't buy. But the answer is you can buy if you can afford. You can't buy if you cannot afford. And that is where we should be. And so this is actually, I think, a great thing. This shows dramatically, and it also shows, if you look at this, how long it took to work through the number of short sales and foreclosures and REO, all that. It took years to work through the mess of 2008. And now we're at a place where we are pretty much humming. That's good.
Right. So that's that.
Wow. All very interesting. Very interesting facts. Well, and so Anne and I follow, as she was saying, economists, experts who are looking at the economy as a whole, looking at the real estate market as a whole around the country, as well as here. And nobody, I mean, when I say nobody, I mean the overwhelming majority. There are always going to be outliers on either end of the spectrum, but no one is anticipating a disaster like 2008. Just no one. We don't have that situation. And instead, what we're finding is that in recessions, real estate, when it's not a real estate driven recession, does very well.
Yeah.
Oftentimes the values go up. And when they do go down, they go down a very little bit, and it depends on other things going on in the market. We are not anticipating a loss in value in Chicago, because Chicago has grown very modestly. We are not, God bless, we are not one of those locations that has gone berserk and everyone's buying. Instead, a lot of our growth appreciation is due to the lack of new homes being built in Chicago and new properties. I know it feels crazy when you live in the Central District like I do. There are all these condos going up. Who's going to live in these condos? There are people.
Yeah.
So anyway,
right.
yeah. We're
All
gonna
right. Last week we promised that we would answer some questions.
Yeah.
And we have some questions. Okay. You ready to answer a few questions?
Absolutely. You shoot them and then we'll discuss it.
Okay. Number one, you keep talking about low inventory. How do I find something I like when there's not so much on the market?
That's a great question. Anne and I are talking to sellers all the time, and a lot of people are saying, "Oh, I want to move in March. I'm going to think about it in March, April, May." So we also, and a connected real estate broker, will know of things that are coming, and sometimes we can do things to hustle it along. So one. Two, we have access to something called Zenlist, a proprietary it's a website, but it's effectively the MLS, and you can see things that are on private, which means they're not entirely ready to go on the market, but you can see what's coming. Third, we are also in something called the Top Agent Network, which allows us to see things that are coming even further in advance. People say, "Get ready, something's coming. What do you think?" And so we have access to a lot of things that are coming.
Right.
Some people have been successful in dropping a note in a mailbox, especially in the suburbs where people are sometimes more open to that kind of thing. What would you do, Anne? What are some other things that you would do?
I don't know. I have sent letters out. I have made phone calls on behalf of clients on properties, and that can work. You have to be patient.
I also think
but you can certainly find things in this market. Here's the thing. If you are looking for a single family home priced at $1.2 million on the 1900 block of Mohawk, you're going to be very disappointed. Okay.
Yes.
But if you have some flexibility in location, you have some flexibility on price, you don't, excuse me, you don't have to have a particular floor plan or whatever. We can certainly work with that.
Also,
if there is something specific, then you have to be patient and wait. But
also, I know this is stressful for people, especially people who or families or individuals who are working full time, and the thought of having to do a remodel, but you got to be open to doing some work.
Right.
You'll pay less upfront in acquisition cost, but you'll get something that ultimately is good. It just means it's more work than you thought. And there are a lot of people who say, "Well, I just really don't want to work. If I rent, I can just, it's a box that's in pretty good shape and I'll be fine and renting." And the answer is, yeah, but you're also holding off starting building wealth. And real estate is one of the bedrocks to building wealth in America. Wish it weren't true, but it is. So every year you hold off, you're actually hurting yourself a bit. So
okay. Anyway. Question. I have to sell my condo this winter. What should I do?
I would get it looking as great as possible, pricing it correctly, and doing everything that we tell you to get it going. What would you do, Anne?
Same thing. I call prep, price, and promotion.
Yeah.
Prep it properly, price it right, and have us promote it the way we know how to promote it so that everybody out there sees it.
Yeah.
And it'll sell.
And it'll sell. But you also have to so many, and I mean this from love, so many people are think, well, it shouldn't be this hard to do something. I shouldn't be so inconvenienced, and I get it. But the only way for it not to be not to be inconvenienced in the long term is to prep, promote, and price, because then it'll sell faster.
Right.
It's a process. It's not magic. It was magic sort of in October 2021, but it's not magic anymore.
Right. I don't want to have to do any work on a new home, especially now that I have less money because of higher interest rates. What should I do?
Well, the homes that are less expensive are going to need some work. So
yeah. My thought too would be, I don't want to do any work on a new home. Buy a smaller home then.
Yeah.
If you really have to have one that's already done and you have a certain price at which, you can only pay so much per month, buy a smaller home. If you want a big home, buy ugly.
And the tricky thing is, for a lot of people, one thing they can't compromise on is size, because they have a family. And it's too hard to shoehorn a family into something that is perfect and small. It's just hard. It's hard. There is no perfect that is small. So I get it. There isn't perfect in your price
on location.
Or change location. Absolutely. Change
Drive
location.
50 more minutes to work, whatever. That's another way to give.
Yeah.
So, all right.
You got to be open. You got to be open to things that you weren't open to before.
Right.
Yeah.
And this doesn't have to be your forever home either. Do you know what I mean? Get into something now. 5 years from now, 7 years from now, do something else. Okay. Yeah. With interest rates so high, who's buying now?
I am finding, and I don't know if you are, I'm finding that cash buyers and people who are truly cash buyers are buying. People who are financing very little are buying now because they're buying with confidence. Right. They are very disappointed by the lack of stuff on the market, but they are buying with confidence. And yet I still see, and if we have time, I'll show you, the lower end of the market is moving quickly too. Lower end attached properties are moving quickly. So first-time home buyers, maybe who have some support from families, are buying, or who recognize that I've got to buy now because it's only going to get worse in the rental market, and I can refinance in a couple of years, or maybe next year. Yeah. How about you? What are you seeing?
No, I'm saying exactly the same thing. Well-priced properties are selling, if they're perceived to be a bargain. And there are certain, first-time buyers, cash buyers, and very unique properties that don't come up very often.
Though I saw something. Yeah, absolutely. I saw something that said, first time, and this was national, so we're not sharing. I very rarely like to share national news with you because it's just not accurate. But first-time home buyers are down hugely, being pushed out by rich people and iBuyers. So it's really amazing. iBuyers are these companies that buy up homes and then resell them. Sorry for the bouncing. Hello. So Chicago may be different because we are not so unaffordable.
Right. Okay. Let's switch. You brought up that city council is thinking about expanding the coach house or additional dwelling unit deal.
Well, in the Sun Times, they reported one city council member had brought up or is trying to bring forth bringing this, what is it called?
Additional dwelling unit, ADU.
ADU, additional dwelling unit. I call it the coach house rule. Additional dwelling unit ordinance to be citywide rather than targeted as it has been on neighborhoods that are gentrifying quickly.
Or lower density. Yeah.
And lower density.
Well, then it occurred to me, we haven't really talked about coach houses in general. So I pulled some photos for us to look at. So
and these are in more dense, these two are in Lincoln Park, which are traditionally not allowed it. So they would be allowed, new ones would be allowed under this thing. Go ahead.
Yeah. So we're both familiar with the fact that coach houses are currently grandfathered in places.
Yes.
So if one exists, particularly a vintage one you see right here, we encourage our sellers to keep them because since the 50s, they haven't been able to build more. Currently, in particular areas where it's less dense, they're trying this out where you can build them again. And here are a couple. Now, these are units that sell by themselves. So if you can picture the lot, the back part of the lot has been sectioned off, been given its own PIN number, and sells as if it's like a single family home or a condo.
Right.
They can be either or, by the way.
Right. I was going to say, yeah.
So here are a couple here.
Mm-hmm.
Here's a cute one that's currently for sale in 1927 North Hudson. They typically do not have parking because the first floor is housing and not where you put your car. So this one's $629,000. Compare it though to a condo.
Well, that block of Hudson is permit parking, so it's actually pretty parkable.
Okay, this one, I showed this one. In fact, I had a buyer who almost bought this. This is an adorable one, and this is a condo. So the building in front has 3 condos. This is the 4th condo, and it does have parking underneath. It is, how cute is that?
Look how darling is that? Gosh.
And this is in the Southport corridor area. Okay, here's one that is the house and the coach house for sale together, which is another way that you see coach houses in the city, and the way the additional dwelling ordinance works, where you own a home, you've got your lot 125 feet deep or deeper if you're in an area like East Ravenswood, and you take the back part of the lot, build your coach house, or in this case, it was already here, but you own the entire property, including the additional dwelling unit. 1708 Sedgwick. Here's what the front looks like. This is currently under contract for $2.3 million. Here's what the back, the coach house looks like. Okay. Here's Geneva. Here's where the front, isn't that cute, vintage?
Oh,
and here's what the back looks like.
So good.
All right. So then the other option is rental, and you'll see coach houses for rent. Isn't this adorable? 3119 Racine, 1,500 square feet, 3-bedroom, 2-bath. This leased in June for $38.50.
That's the coach house?
Yes, I know.
Oh,
it looks like a full house, doesn't it?
Yeah.
I know. Okay, 2032 Kenmore. Oh, excuse my misspelling there. Isn't that adorable? Now, kudos to this listing agent. This is virtual staging.
Mm-hmm.
But doesn't that look cool? And that is almost 2,100 square feet, 2-bedroom, 2-bath, no parking, but $3,500 a month. That's a cute little unit if you don't mind not looking into the street. So we have one more thing I wanted to cover quick before we call it a day, if you don't mind, and that is for you to share your units that are priced well and selling fast.
Well, so I was taking a look at, oopsie, that was Leave Studio. Looking at units that what are inexpensive, which are not terribly expensive, because inexpensive is in the eye of the beholder. Hold on. So these are under under $350,000. Can you guys see it?
Yep.
Okay, so first I've got this cute one. This is up in Uptown. This is 4721 North Malden Street. Unit, it's a garden unit, so one of these lower level ones. But It's on the market for $350,000, and it's 1,600 square feet,
Wow.
which is really darling. And you can tell just from the way they've staged it. This is a newlywed couple that are probably trying to move to a larger home, but at least from the photos show that it gets pretty good light.
Right.
It's not a view, but
It's a lot of space for the money in downtown.
it's a lot of space for the money in Uptown, and it's got an exterior spot, so it's got parking. The second one that I thought was sort of interesting is this building. This is 6033 North Sheridan Road. It's called the Malibu East, this building to the left. The Malibu is the building in the center, but this one's at the Malibu East. But these are tipping into the lake. Beautiful, incredible views. So this unit is 1,450 square feet, and it's on the market for $279,888. Oh, I took a look at how much it would cost for a real first-time home buyer, the monthly expenses. Let me go back to the other one. The other one, I assumed 5% down and a 7.5% interest rate. So just so you know, the payment for the first one was total payment was $3,215. That's a lot, but it's getting started on one's home. Now this one, the total payment is just under $3,000 a month, and that includes mortgage, principal and interest, PMI, because it's 5% down.
Right.
And the monthly association dues here, which are just under $700. But the point is, this unit, and I know that's a lot of money, but this unit has this building has a ton of amenities. It's got a gym, it's got a pool, it's got all sorts of stuff. And so you get good space, a nice view of the lake. So it's pretty good, so just under $3,000 a month for 2 bedrooms, 2 baths, and 1,450 square feet. Then I went to I'm hiding something because it's making me crazy. Oopsie. Are we still here? Hold on.
Yeah.
Hold on. I went to the south side. I went to Hyde Park, and Hyde Park has big apartments. So this one is right close to campus, the University of Chicago's campus, 5427 South Hyde Park Boulevard, Unit 3, and it's on the market for $275, and it's a co-op, believe it or not. So its monthly of $900 includes its taxes. But take a look. Look how big this apartment is. That's a dining room, butler's pantry, and kitchen beyond. And I didn't show the pictures of the kitchen just because it's just a regular good-looking kitchen. I loved this bathroom.
Oh, that's fun.
The other bathroom is modern, but they kept the vintage look of this bathroom. And I thought,
I love it.
Everyone needs to see that. And then it's got this nice back porch that they've screened in. So at $275,000, the monthly, the total estimated payment is just under $2,900, $2,891. So a lot of space. The only tricky thing about this one is there's no parking, and Hyde Park can be tough to park. But if you're not a car person, it's pretty
right.
good.
Right.
Yeah. So that's all I have for this. Okay. Hold on. I'm trying to unpresent. Stop screen. There we go. Thank you. Just some ideas on things you can buy that'll get more affordable once interest rates stabilize or go down a little bit.
Sounds good. Everyone, thank you for watching as always. We will be back next week. Please let us know if you have any questions or any topics you'd like us to cover. I think next week we'll probably try it from our office where we'll have a little more Wi-Fi and flexibility to show you just how great we look in the morning.
Ouch.
Good to see you, Kyle.
Good to see you. Take care.
Bye, everybody.